The Momentum Africa Equity Fund is in the top 5 best performing unit trusts for the year to date across South Africa. It's an amazing performance if you consider that we're talking about over 1,000 funds there. Joining us to give us some more insights into how he's doing it is Fungai Tarirah, Head of Africa Investments at Momentum Asset Management. You were showing off a little earlier, but I've got to let you show off in front of us. I've been having a look on my computer trying to find what a Kenyan shilling is worth in US dollars.
It's 86.90, at least that's where we closed yesterday. We've seen some volatility in the market there, but it's down quite a bit, 1.2% in the month to date. So the slip is starting to come through.
So what's a billion shillings then?
It's,
a billion in US dollars. It's about 800.
I'd need a calculator.
You need a calculator. I thought I'd catch you somehow. This ARM Cement, before we go into your fund, it looks like a real interesting company.
I think management has a solid understanding of the business, not only the one that they run, but I think the sector in general. So they really understand the drivers of a quality cement business, and they've been able to do that. There have been concerns in previous times around the debt that the business has taken on over the years. But that's because, I think, and he mentioned it in the interview earlier, they're really targeting some punchy growth numbers on the volume side. And to achieve that, they would have been capital hungry. Extending into Tanzania, I think, comes through as a bonus for them. It's a better sale price environment, so that helps their top line as well. And they've been able to keep their costs down. So
and it's one of those businesses that you can actually only do locally, cement.
Cement is very localized, except for the people who are actually trading along the coast. So you find that in East Africa, a fair amount of imports do come in from Pakistan and India and sometimes China, because they can land fairly quickly and cheaply. But then there's a quality issue. Now, most people will tell you that cement is in good condition within 100 days of it being produced. So after 100 days, it starts to lose strength and it doesn't work as well as it actually should.
Let the buyer beware.
100%.
Fungai, your buyers are not bewaring. Your buyers are celebrating 50% in the last 12 months. You, in fact, are number 3 on the unit trust performance table for the year to date. So not only are you giving everybody in the Africa section a hiding, of all unit trusts, you number 3. It's quite an achievement. Let's just maybe go back into a little bit about your own background and what you do to find the stocks on the continent that have performed so well.
Momentum Asset Management has a team of 3, including myself, and we spend as much time as we possibly can traveling the continent, trying to find opportunities, listen to people on the ground, hear what's going on, and look for ideas that we can put into the portfolio. So for a large part, I think that has come back to help us, as we can actually see, physically see the changes coming through in quite a number of the countries, and it helps when it comes to stock selection.
I guess you don't have to do that much traveling as well. As you've pointed out in many presentations, and we all know, you've got big 5 markets on the continent. If you take South Africa out of it, then it's really a big 4, with Nigeria, Egypt, Morocco, and Kenya. Do you spend most of your time in those 4? In
an ideal sense, but what happens is sometimes, if your process is bottom up, and ours is bottom up.
Well, what does that mean?
It's more about the individual stocks that you put into the portfolio, and not so much the countries that they hail from. So if you're looking for individual stock ideas, that can take you to all sorts of places. And we have exposure in the fund to countries that are not part of the big 4. We have a healthy exposure to the big 4, but we are looking at other countries as well, Mauritius, Zambia, Zimbabwe, Kenya, which are not part of the big 4, but have meaningful contributions to the portfolio.
So you would have found the companies that you liked in those areas and visited in their headquarters, but I guess a lot of what they're generating, their profits, would not necessarily just be generated in that country.
You get a mix. So if you look at the East African companies, for example, many of them are buying into the regional story, and they're managing to earn a lot of their earnings from the neighboring countries, not just their own home countries. But if you go to Southern Africa, for example, you'll find that some of the businesses, or the great businesses we've come across, are all 100% local, and they're focused on the local environment. But it's the way in which they do it and the valuations on which they trade that make them attractive.
This 50% return is solid because it's a 800 million rand fund that you're running now. So if I'm a unit trust holder and I want to get my money out, I can cash it in and get it immediately. But when you go into the underlying shares that you've invested in, how liquid are they?
So one of the things I think a lot of investors have to accept on the outset is Africa is not going to be as liquid The rest of Africa is not as liquid as trading in South Africa. South Africa trades $1.1 to $1.3 billion a day quite easily. That's the volume of shares that are going through on any given day. African markets will trade substantially less than that. Egypt on a good day used to do about $180 million.
Used to.
And now with the current situation, you've seen those volumes come down fairly significantly. So one has to already appreciate that liquidity is not going to be at the levels, at least the South African investor, not going to be at the levels that they're used to. Having said that, we have ways and means where we screen out certain stocks that we don't participate in from a liquidity point of view. So we only look at companies larger than $100 million in terms of market cap.
How many are there on the continent?
By the end of June, you're looking at about 870 companies listed in Africa. And then of that number, about 260 are larger than 160 million.
It's a big universe to investigate.
Fair enough. But then we further screen the liquidity that they trade on a daily basis using the history from the previous 3 months. So once we've done that, we only focus on about 90 companies that we think can give us the right sort of liquidity. It's not going to be the same as South African liquidity, but in an African setting, it's a lot better than many of the other companies that you find. And that's where we focus.
Of those 90, how many do you have in your portfolio?
Currently, we have 36.
36. So 1 in 3, if they happen to be liquid and over $100 million, will qualify?
On a liquidity screen, yes, but then they have to meet the valuation metrics as well. So the number 36 will vary from time to time, depending on how attractive or not the companies are.
You also seem to trade your portfolio quite a lot. I was looking at recent changes in the breakdown, and you certainly aren't shy to take a position.
Well, I think one of the two things that have taken place in recent times, we have seen some inflows coming into the funds, which means that we have had to trade our positions to try and get into the stocks that we actually appreciate. But coming into 2013, we were actually with a fair amount of cash sitting in the portfolio. And as opportunities pop up, we've been picking up in the various countries where we think we can actually find value. In terms of the countries or the stocks or the sectors where we have exposure, those haven't changed drastically. Our normal rotation on the portfolio is actually quite slow. That takes place over fairly long periods of time because we are playing longer term themes in the portfolio. If you're trying to play a growing middle class, that doesn't happen in 6 weeks or in 6 months. It takes time for that to actually come through. So you'll find that our movement across our selections is perhaps not that quick, but that entry and exit is something that we do try in time to make sure we get the right sort of performance.
If we go back to that 90, that universe of 90, because I'm sure there are people who have never invested on the continent who are watching this program and they're thinking, this guy's smart, but maybe I can also do well out of it. Of the 90, 1/3 of your portfolio is in banks. How many of those are banking shares?
So if we go back to describing the universe, right, I'll focus on the entire universe. Let's just start there. You've got a total market cap of about $236 billion spread across 870 companies. Of that, 35% is actually in banks, insurance, and financial companies. So you find that a lot of the banking institutions are listed across the various countries. What's also quite big on that is cement, building, and construction, as well as the media and ICT companies, which are largely the cell phone companies. They also show up quite large in that respect. So when one is looking at a sector breakdown of what the plain universe looks like, that's what you really have to contend with. Those are the largest ones. Notable omissions: agriculture. Not a lot of agricultural companies are listed. Not a lot of resource extraction businesses are listed on the African continent.
And country-wise?
Country-wise, as you mentioned earlier, the spread is really going to be Morocco, Egypt, Nigeria, Kenya. They make up roughly 86% of the total Africa XSA universe by market cap. And then you get many of the other countries coming through. We count a total of 16 countries that we can participate in. But in some of the countries, you don't get a lot of contribution in terms of market cap.
Fungai, I didn't hear you talk about oil. Given that 60% of our continent's exports are oil, you would have thought by now we would have had investable companies.
So when you think African oil, you'll think Algeria. To some extent, you'll think Egypt. You'll certainly think Nigeria, as well as Angola, and a few other countries, and of course the East African countries who have recently made discoveries. Now, in all of those countries, it's either a state-controlled asset or an asset that the government exploits and private sector partners with government, and in most respects that's not listed. Or it's like in the case of Angola, there is no stock exchange for you to actually have a listing, or you'll find that it's the multinationals that are taking part in oil production.
It's sad that the multinationals don't perhaps list part of their operations, of the local operations, on the Nigerian market and so on. Is there any move in that direction, any agitation for them to do so?
We have seen with some of the exploration companies, notably Tullow out of London, where they are actually making the active effort to list the local businesses that are participating in the oil industry. So I think that move is starting to come through, and it would be nice to see it not only in oil but in many other sectors as well, to have that take place. If you look at the food and beverage companies, they have done that for various reasons in historic times. So you'll find Heineken, SAB Miller have all got listed subsidiaries in the various countries where they actually operate.
A little earlier, Lindsay was having a chat with Eugene Goosen, and Eugene was a little negative. Let us show that it's actually a good story that we're looking at on this continent. Debt to GDP ratios. We were on recently, I attended one of your presentations. It's unbelievable to see how well Africa is positioned globally on that score.
Compared to some of the numbers that we see out there, Africa is not highly geared. I think a continental median is sitting around 42.6%. Total government debt to GDP, which is particularly low if you think about some of the numbers we're seeing coming out of Europe, the rest of the West, or indeed some of the Eastern countries. But what does that mean? It means that...
Oh, lowest in the world.
Wow. Maybe not lowest in the world, but at least...
on a regional basis.
Yeah, on a regional basis, I think we would be vying for that title. Why that's important? It does buy the government's headroom in terms of their financing options when they're looking to improve the economies that they actually have. You look at Kenya, which has recently implemented a new constitution, and that has come along with a number of costs. They need to set up a county system, they need to set up different things that were not in government that they will have going forward, and all of these come at a cost. So they have financing options. It's not just about increasing the revenue that they collect. They can actually dip into some of the borrowings.